The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 22nd, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? Yep, let's have an extraordinary day, an extraordinary weekend. And of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. We know life is going to toss circumstances to us. Hey, how about right here, right now? How about today? We're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. I am. But more importantly, I'm here to serve you. That's right. I'm here to serve you for this 60 minutes. So give us a call at 877-927-6648. If you can't call in, we've got you covered. You can send me an email, steve@tfnn.com. Just put radio show question in the subject heading and in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous, fun day Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 154 points. 26,004 is the print. S&P's up 15, NASDAQ 100 up 44, Russell up 11, semis are up 13. It's the transports that are the only indice to the downside, off 49 points. Gold's up $6, silver up 11 pennies, light sweet crude 44 cents. Lead the charts, the upside. It is the trade desk up 44 bucks. That's nearly 30%. Wayfair Inc. up $34, 29%. Universal Display, OLED, up 22%. There's some big movers to the upside. Roku is up 20%. DMC Global is up 29%. To the downside, Stamps.com off 113 bucks. That's 57% to the downside. That is a stinger. Kraft Heinz down 13 bucks. Annika, not Sorensen, but Annika Therapeutics off $8, nearly 20%. Dexcom off about 5%. Oh, another 50%er. Diplomat Pharmaceuticals. Of course, we're going to look at what you want to look at. That means we're going right away to the email lines out here. The email lines, Tim M. writes in. Tim wants to know, says, could you please look at, revisit EFA? I'm long since early January. So let's go over here to EFA. EFI is the iShares MSCI EAFE ETF out there. I know that's a mouthful. Basically, it's looking at the large and mid-cap stocks out here for everything except for North America. I believe that's it. Between so that's the U.S. and Canada. I mean, like, just quick on the spot. In any event, it's trading out at 64.17. You're long at 60.14. Got a slight profit. Yeah, you do have a slight profit. That would be, about 8%, give or take, out there. I know where support and resistance levels are, is where Stevie's red and green line is. So to answer that specific question, let's go to that chart that can give you that information. So if you're looking for Stevie's oscillator unchanged line, that's at 63.53. So any pullbacks and tests of 63.53, no problem there. As we take a look at EFA, the ETF out here, are we seeing any signals of a top? I don't know. Let's just do the wave count to the upside out here since the 26th. And so EFA did get a seventh wave move, little shooting star candle that formed on that trading session, has not been taken out. You'd like to see it get taken out in order to recycle to the upside. That's the February 21st high out here. So it could be a change in trend, but we're not seeing it just yet. You wouldn't see it until at least you see it close below Stevie's green line, 63.53. What does this say? This says price can go all the way up to Stevie's solid green line. That's that start of that Tommy DeMark setup trend line count to the downside, and that takes you really to the high of September 28th. That high out there is in the 68 and change level. So another $4 to the upside. That's a possibility. If you're trading this, one thing we should go look at, and I pulled this up just before we were getting on the air out here for that specific question because it came in earlier, was the correlation between that and the U.S. dollar index. And this is a daily time frame chart out here, Tim, that you and I are looking at. The top panel is the ETF you're looking at, that you're invested in, EFA. The center panel is the U.S. dollar index. These are daily time frames. And the bottom panel is the correlation between the two. Now, this is a 5-day correlation, so that we've got a little bit of smoothing out here. And you would anticipate or expect to see an inverse correlation. When the bars are below zero, it tells you you've got an inverse correlation, meaning the U.S. dollar index goes down, then the EFA goes up, and vice versa out there. So I think you may want to consider this in your attack out here. It sounds almost like you're more of a shorter term than a longer term trader out there. I don't know if that is the case. But what you want for this to continue moving higher, so it would appear, is for the U.S. dollar index to move lower. But if we take a look at the long-term chart out here, it's a tad confusing. Well, maybe it is, maybe it isn't. This is a monthly time frame chart out here. You can see when it formed its bottom, U.S. dollar index, back in what looks like May. Oh, come on. Don't do that. Looks like in May out here in 2011, it does it with a setup 9 count. That's why we pay attention to these out here. Price finally broke through that level. This was in September of 2014. See how that level held as resistance all the way up into that point in time? You tell me whether this is a valuable or invaluable tool out here. Price moves higher, does what? Forms the top with what? Forms it with one of those Rhodes momentum indicator signals out there. That was in January of 2017. Price makes a move lower. I don't know why price stopped where it did. We could go investigate it. We're not going to. We just know that it moved down into the February of 2018 time frame. And now with regard to the U.S. dollar index on a longer term basis, just like resistance, the green horizontal line was resistance. Now it's got really key support at May of 2018. It did form that 9 count where number 8, which was the month of December, was the high. That says that price can pull back. But price did pull back on a monthly basis to the first level of support, which is Stevie's green line of 95.62. So that area is held out here. Tim, from a longer-term perspective, if you really want to see the EFA move higher, this goes for the EEM and any of the other E's out there, which I'm being facetious about, says that you want to see price get below, on a longer-term basis, 95.62. Because if you don't, then all that the U.S. dollar index on a longer-term time frame, all it's been doing is making, in essence, a series of higher lows out there. So hope that helps you out with your trade. Thanks for writing in. Have a nice weekend as well. The next question that came in from Bob Y. Bob says, great show. Thank you for that. Please give us your take on silver. I've been playing the USLV long and have been in and out, and currently you are long. So, Bob Y., if we go take a look at silver, I think that for silver, let's start with the market profiles, multi-time frames out here. So you're in and out, you're in and out. 60-minute time frame, the bar is green, meaning price is above.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And so, Bob, that's what I think of silver. I'm just kidding you out there. Sorry about that. I wasn't paying attention to my clock when we went to break out there. Clearly, I must have thought I was one of the Eagles, Glenn Fry or something like that, because we took it to the limit as far as you could. So we were taking a look at silver out here, and what I was trying to say with regard to the short-term time frame, the 60-minute time frame, was the bar is green, meaning price above resistance. Resistance being 1587, and that's the top of the profile out there. With regard to the 120-minute time frame chart, price is trading right up into it. The top of that box is $15.91 out there. You're trading at $15.91 as we speak. If price can get above that level, then what price should do is move up to the top of the 5-hour profile. That's $15.90. Now, if it were me at this stage here, I don't see any reason for you to duck out of the trade. Of course, I don't know where you got in, what your outcome, what your plan was when you got into it, what you were using as a reason to get into it. The reason to say, hey, maybe you want to just stay put for the time being. You don't really have a rejection, so to speak, of on the 120-minute chart. Total rejection, no bearish reversal candle or anything like that. And price above the daily time frame, top of its profile at $15.82 out there. Now, that's the upside. What's the reason to go ahead and close it out? Well, one of the reasons would be because price has not been able to get above Stevie's green line. That's at $15.95 out there. So to the extent that you were thinking, I got in this trade, I'm in, I'm out, I'm in and out, I'm not really married to it, so to speak. You really want to see price close above $15.95, I would think, in order to go ahead and take that trade into the weekend. To me, silver right now is very difficult to call. But from a bullish standpoint, you prefer to see price above the green line. You still have a rising price. You still have I take that back. You have a price oscillator that's above zero, but it's starting to fall. It began falling yesterday when price closed below Stevie's green line. So I hope that helps you out. Thanks for writing. Much appreciated. We had a request inside the Tiger's Den to take a look at gold. So since we were just taking a look at silver, it seems like now would be the time to take a look at gold, although I need just a tad more time to actually go ahead and pull up the gold contract on Stevie's system out here. There we go. We've got it. But let's pull up. I know you don't see it. Let's pull up the April contract for gold. Try to figure out what it's doing. Now, we were looking at silver. By the way, gold is trading at 1332. And Bob and I were taking a look, and you were taking a look at silver out here. And we were taking a look at silver, and we were saying, you know, it hadn't gotten up. Whew, man, that is just amazing grammar that Steve-O is using out here. But if we take a look at what gold has done, is it's been able to reach Stevie's green line, 1335.70. So watch this too. Not that gold and silver have to move together, but gold tested and rejected an important level. So watch 1335.70. Utilize that maybe for identifying what it is you want to do going into the weekend out here. If we just look at market profiles, really looks pretty good. Actually, the April contract has generated a new profile. It's different than my synthetic contract. I can see that, where the top of the box is 1322. And you're at 1333. So you've just got one more hurdle, or gold has one more hurdle. Whoever had asked me about that, gold's got one more hurdle to overcome. That was Stevie's green line in order to get its mojo back out there. The 5-hour time frame chart, you and I took a look at it yesterday. I believe it was Brent in Martinez, California called. He was thinking of taking a short trade in the GLD, and I believe my message was not just yet. And the reason we said not just yet was because we had that Tommy DeMark set up 9 count on the 5-hour time frame, 5, and price had already pulled back, and it was underneath Stevie's green line as well as the bottom of its 5-hour profile, and it looked like price was going to go test that solid horizontal red line out there. That's exactly what it did on the 5-hour time frame chart. So the topping pattern, that 9 count, did what it was supposed to do, alerted you to the potential for some type of retracement. Retracement back to where? Retracement number 1 was the bottom of the profile. Once that failed to hold price, then it went right back to that Tommy DeMark setup trend line, that little red line out there, and it was tested at 5 p.m., around 5 p.m. yesterday during that 5 p.m. candle session. We could see that price earlier today, and that was at 9 o'clock, tested that level and bounced off it. So we know that's a really strong level of support. In fact, one of the things that I suggested to Brent was wait for price to break through that, because then you could see some type of change in trend out here. The bounce, though, on a 5-hour time frame, so we see the daily. This is not the daily, but we saw in the daily price found resistance in Stevie's green line. Now we know price is dealing with resistance of the bottom of that 5-hour profile out there. We're sitting, in essence, right on it. So what do we do now? I think you just sit there and you watch. You don't take a new position at this stage here, and you watch to see what the real intent of price is when it comes to gold out there. So I hope that answers the question with regard to Stevie's take on both silver and gold. And who was it that asked? For Tucker, did you ask me? Yeah, he asked me to take a look at gold. So we did that. We've got that knocked out of the way. Let's go take a look at some of the other questions that have come in out here. Bob, I hope that helps you out on your USLV. Hector and the fuel injectors, he says, hey, happy fabulous Friday. Hey, back at you. Fantastic, fabulous Friday. If you can, during today's show, I'd appreciate your take on HMY. That would be Harmony. Is now a good time to nibble on Harmony Gold. HMY is a ticker symbol. Let's go take a look at the 3 time frames out here, see what it is doing. And while that's going on, we'll go take fill up Stevie's other chart. So Harmony right now is trading with inside a bit of a range. The range between 203 and 217. Your better trade on Harmony was as price was moving down to the 203, 206 price area yesterday. We look at the daily time frame chart out here, Hector, what we can see is that bullish structured box, meaning that the center line, 206, closer to the bottom, 203 versus the top at 217. We also know that we're really up at resistance. So is this a good time to buy? I think no, it's not, because this 217 area, that happens to be the trading session from October 15th, which had 6 million shares, is held as resistance. It was tested back on February 8th with 4 million shares, light volume. Tested again a couple of days ago with 6 million, about the same number of shares out there. But prices pulled back. So would you buy the 213 knowing you've got resistance at 217? Hector, no, you wouldn't do that. I know that. And you didn't know that that was resistance until we just started taking a look at the chart out here. So your question was, where is it time to nibble? I would say your time to nibble, again, right now is the 203, 206 area, and, not really 213. That's looking at the chart. You might just say to yourself, are you kidding me? 7 pennies? 7 pennies, 7 cents. Well, it's a $2 stock out there. So 7 pennies means a little bit more to this than it does on a chart like, I don't know, Amazon. Here's all that I can do. Let you know where support and resistance is, and then let you go ahead and make the trading decision. What do we see on a weekly time frame out here? We can see the area that resistance is at, which really lines up with the daily chart. This would be the week of October 15th. That had volume of 19 million shares. This week you're up with about 20. A couple weeks back was a volume of about 20 as well. So it's just struggling to get through this area. Why? I don't know. We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Stevie's not keeping his eye on the clock out there. Truly running it to the end. That's okay. It's a Friday. So let's continue on here. Tucker had asked about oil, light sweet crude. That's what's up on our screen right now. 60-minute, 2-hour chart. So 1 hour, 2 hour, 5 hour, and then the daily time frame chart out here. And the daily looks pretty decent, Tuck. You know, it's above resistance, which is the top of its profile, 55.61. 5 hours says you're at resistance, a bearish structured box out here. Maybe forming a new profile because the bar is orange. Similar to like the 2-hour chart. See how the prior bar was orange? We have a new profile right now. 57.81, 57.61, and 57.81 on the 1-hour chart is your resistance level out there. So I don't know what information you wanted. If you were support is 57.08, 57.11. As much as 55.95, which lines up with the top of that daily box, basically. Would I start a new position right now? No, I wouldn't. And I wouldn't because it looks like today, as long as today is a close above bar number 4 out here, which is February 18th, the daily time frame, today is going to be an 8 count. Oftentimes on 8, 9, or 10, you can see a change in trend. Could just be a hiccup, could be a sideways move. So if you're looking to get in, I'd wait for a pullback. That pullback on this chart says around 55.67 or so. 55.61 is the top of the daily profile, and 55.95 is the bottom of the 5-hour chart out here. But that may be forming a new profile. So that's what I see, Tucker, when I take a look at light sweet crude. I hope that helps you out. HD writes in, says, I'm looking to go long McEwen Mining. Ticker symbol there is MUX. So if we go take a look at McEwen Mining, we've got the daily, looks good. It's above all resistance, resistance being the top of its profile. Weekly is headed to it. So HD, it's at 201 and 206 is resistance. So probably not a good time to take a long position in it. You didn't say you're going to do that. You're saying, I think it might pull back and test the mid-190s. It's trading at 201. Mid-190s to 191 would be the center of the box where it began the day. Top of the daily box is 180. What do we got here? So let's just pull this back. So you've got a swing point from the trading session of January 31st with 2.8 million shares, taken out with 1.8 million shares. So it's taken out with wide price spread, just not accelerated volume. Nonetheless, there's an A to B equals CD to the upside, which translates into the potential of a Gartley sell pattern out here. That 1-to-1 A to B equals CD was already hit inside McEwen Mining, and there was the bearish reversal signal out here. That took place on the trading day of February 20th. If you're wondering why that wasn't the sell right then and there, for those of you that are aficionados of the Gartley sell pattern, it's because price never broke support. So it gave you the signal. That's all. It's like a signal. How do I best describe the signal? I'm looking for a good metaphor for the signal. I could come up with some funny ones. I'm just going to hold off right now. Just want you to know it was just the signal. That's all. That bearish reversal signal out there. No follow through, by the way, on the next day. No close below support. Now, support, we can break that down into a couple of different things on this daily time frame chart. One level of support that you know, we know, I know, is the top of that daily profile, 180. Did not close below 180 when it gave us that bearish reversal signal. What was the other level that we could look at? Of course, Stevie's red or green line out here. Well, as we pull McEwen Mining, MUX, by the way, is a ticker symbol, we'll see that price never got down to Stevie's red or green line, never broke through support. So that was not, so you got the Gartley sell, but it evaporated. And it evaporated really the following day. That was yesterday when price moved higher and in essence kind of negated the bearish engulfing candle that formed. However, you think it might pull back, HD. Today looks like it's going to be day number 8. I'll let Tommy DeMark set up 9 count. Monday could be 9. Have they meant anything in the past? Bars 8, 9, or 10. Yes, when it made its high out here on October 24th, the day before, was the 9 count. When it made its high out here on January 4th, it was the 9 count. So what should you do? I think you just wait to see is the third time a charm out here. Knowing that you've got a Gartley sell pattern that could form again, just needs to be confirmed. But until you see it close below at least a level of support, which, by the way, on the daily chart was 187. You're trading at 202 right now. So HD, I hope that knowing that 206 is resistance on the weekly, I hope that helps out with regard to what, at least what my eyes see, for what that's worth. All right, no more questions. We're done. It's Friday. Let's head to the course. We should head to the course. We should get a big old golf game going. Don't you think? Oh, I see there's more questions that have come in, one at least here. But before I do that, Earl the Pearl, we're just going to go to Earl's question out here because we got about 2 minutes. XOM is the question, or is the equity that Earl the Pearl, who was Earl the Pearl? I don't just make that stuff up, do I? He's a basketball player, right? Wasn't there a basketball player? His nickname was Earl the Pearl. And I apologize. I don't know who that was. Gotta be an Earl the Pearl out there. If not, well, then that's Earl the Pearl on our show out here. And Earl wants to take a look at ExxonMobil. He said it made a low at 64, 65 in December. Now it's over 78. Long-term holder of ExxonMobil. Does ExxonMobil have a target on the upside? It does. Now, just so you know, today, brand new profile. So really trading between support and resistance. 77.19 support and 78.81 is resistance. So you really want to see this clear 78.81. If it closes above 78.81, the intermediate term chart, which we'll call the weekly, 80.22 would be the number out there. If I take a look at ExxonMobil on a daily time frame out here, today's bar above 4, it looks like it's going to make it. Looks like today is going to be bar number 8 in that TD setup 9 count. So, and you've got real resistance. It's the green line. Don't pay attention to the red horizontal lines out. It's really the green line, Earl. It is the trading session from the high of December 7th. You always want to be careful. And I don't know that a 9 count will form. We would not know that until Monday's action out here. But if it does form out here and it closes, and it's forming below resistance, just using this one little principle, this one little tool, that's the high of 80.36 on December the 7th out there. It says you've got to watch out. Now, watch out for what? It could just be a pullback to support, which is 76.72 on the daily time frame, which is Stevie's green line, and that's going to be less than the daily. I believe it's less than the daily, which is 77.19. Yeah, so it's going to be that 76.72, 77.19 area that you could see a pullback to, but would not indicate that anything was wrong. Not until you break a level or 2 levels of support. In this case out here, would there really be much of a problem on the weekly time frame for ExxonMobil? Because that's really what I should have been looking at, right? Because you were, in essence, suggesting that this was more of an intermediate term time frame. But you need to know, what you're going into. The weekly looks pretty good right now. Weekly says over time, price ought to head up to about 86.88. We'll be right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Sarasota and speak with Ray. Ray, thanks for calling. Thanks for holding. How are you today?
Doing well. Calling in to get some advice on a couple of my positions.
Sure. So one is Avon Products, yes?
AVP?
Yeah. Tell us what you're doing, what your time frame horizon is, what you're looking at.
Well, I've had the position for a little while, a few months, and I really added a lot to my position when it was down around 150, 160.
Okay.
And I'm looking to see how long I should be hanging on to this position. It's had a nice move.
Yeah. What was your intent when you got into it?
Well, I used to work for the company years ago, so I guess I was just looking for something in the intermediate term to hold on to it because I felt that it was oversold.
Okay. So here's, the month of February, it's not over. It's not over till next week, Thursday or Friday, I believe. But one of the things that you like about Avon Products is something that it has not done since December of 2013. And the chart we're looking at here, so I'm just kind of giving you the longer term view of it to consider. And when I went back to December of 2013, Ray, I'm looking at its monthly market profiles. Now, these are horizontal levels of support or resistance. They're really helpful in allowing us to understand what the intent of the instrument is. And we haven't seen a close above a top of a market profile on a monthly basis since that time period. That was the last time, December 2013. But this month here, you now are above the top of that box, which is 235. So that is suggesting to you and I that there may be a longer-term change in trend that is underway. Nice bars that we have seen from a weekly standpoint. This looks pretty nice. You've got good volume in it. Volume, by that, we're at 44 million shares. It's above prior swing points. It's moving into this little downdraft from July of 2017 that had similar volume. So, and you're up at the high. I'm not seeing where those buyers during that week in July of 2017 are natural sellers at this stage because, we're trading at the high of that session here. Usually you would see if those people were still around, they just wanted to get their money back, we would have seen that selling I would say this week as price got in there. So that doesn't seem to be a big issue for you. Now, that doesn't mean that price can't pull back, but it looks pretty good to me. I'm not seeing any real signs of a top just yet. If on Monday this closed below 290 or something, might be pulling back, but you're in at $1.50, and it sounds to me like you'd like to hang on to this for a while. Or am I misreading?
I'd like to see it in the $3.50 to $4 range. What's the?
Well, if you're talking about 350 to 350, then you're only a quarter away from that. I mean, it looks okay to me. I don't know if it's, I don't see any topping signals out here to suggest that you get out of it. $4, I think we just have to. There's nothing. So this would say to me that you should see around 390 for sure. No guarantees, but that's just getting back to the last time where there was any kind of sideways-ish, reversal-ish, swing point-ish. That's July of 2017. But I'm not saying that's the end of this move out here. So it looks pretty good. Okay? Good. I mean, I don't know how else to put it, but it looks pretty good to me. I like what we just looked at on the monthly basis. Month of February is not over. So as long as it doesn't fall apart in this month, it looks like Avon Products may have a change in trend underway.
Excellent. Okay. And the other stock was NAT, Nordic American Tankers.
And tell us what you're doing here and your time frame and all that stuff.
I kind of trade that one, and it had a pullback in December, and I reestablished a position, and they've just come out with an announcement where they've increased their dividend by like 300%, and went from 1 cent a quarter to 4 cents. And the stock seems to be moving on that news. Yeah. So this one is more of a trading vehicle versus Avon Products, right? So what you're going to want to watch for today is going to be, and it's nice, you're at the high of the day, 235 out here. And you're going to have to watch this for the next couple of days from a trading standpoint. And what I mean by that is if I look at the daily chart on with my other set of tools out here at Nordic American Tankers, the last time it made its high was on the trading day. It was really on the trading day of November 9th. The day before was this 9 count. 9 count meaning you had 9 consecutive closes above the close 4 bars earlier. And oftentimes if there's going to be a change in trend, it will happen on bar 8, 9, or the bar following 9. That is exactly what took place on Nordic American Tankers when it made its high. I'm not saying that it's going to do that, but if you were to see this thing, so you're going to get the 9 count today, and if on Monday you get some type of reversal signal out here, this would say price should pull back to 213. Whether that is a problem for you or not, I don't know. But if it gets to 213, 208 is in the picture out here as well. If that's not a problem for you, then I would anticipate the possibility of a pullback. No guarantee of it. And now, ideally, what will happen is this will continue to move higher, and it will disregard that 9 count. And so, therefore, this will be one of those times where you don't see a reversal. Instead, you have a little hiccup or sideways move out there. So I'm not seeing any signal. I'm not seeing any. I'm just seeing a caution sign. You live in Sarasota. You listen to the weather forecaster. He basically tells you it's going to rain almost every day, right? And most days, if it rains, it's pretty quick. So I'm telling you, it might rain. Just have your umbrella, which could be your stops. But I'm not seeing any real signals to say, hey, get out of NAT on a weekly or even a monthly or a daily basis right now. Just a caution sign. Great. As usual, you've been very, very informative and helpful. Thank you.
Okay. Hey, my pleasure. Thanks for listening. That was Ray in the beautiful Sarasota. Now, what I want to do, folks, with just the last few minutes out here is let's go take a look at what's going on in the indices. Similar to what we've looked at all day with the different equities out here, there's reason to carry that umbrella and be cautious. And multiple reasons why. That is, if we take a look at the Dow Jones, you're going to see that it's potentially in wave number 7. That's letter G on my chart. Today is going to be what looks like is going to be day number 8 in that TD power of 9 count out there. So we're always cautious about days 8, 9, and 10. We have seen highs form inside the Dow on days 8. The most recent high where we see that was back here on November the 8th. Doesn't mean go sell the market. You have not seen a break of support. You've got to see a break of support out there. Well, you don't have to, but if you don't ask the reason. Well, why isn't this going down? Right? You got to break through support. If we look at the S&P 500, a similar situation. Today you've entered wave number 7. You can see changes in trend in wave number 7. Today is also going to be count number 8. So it's a reason to be cautious out here. Same thing back in the November time frame when we got to count number 8. The next day was a close lower, and that ended up identifying a top out there. If we take, excuse me, same pattern basically in the New York Stock Exchange. So we'll look at the New York Stock Exchange here for the next 10 seconds. You can see it's in wave number 7, letter number G, count number 8 is what it should be at the end of the day. So just bring your umbrella with you. Don't load up the truck and go short. Might rain next week. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Earl the Pearl, there was Earl Monroe, basketball player. That's who I think I was thinking of, although Brent sent in an email and said that Earl the Pearl was also Earl Campbell for the Houston Oilers. So two great athletes out there. As we go into the end of the show here, there's a request from Lorna in the Tigers Den. Wants to take a look at ticker symbol EGY. That is VAALCO, Valco Energy Inc. And you are long. So if we take a look at the daily, weekly, monthly. Monthly, you can see that price has gotten up to a potential area of resistance, or at least where there's both buyers and sellers, 258. That's the center of the box out there. But on the weekly time frame, last week price broke above resistance. That was at 223. So from an intermediate term standpoint, that looks pretty good. Retracement wise, let's try to get a feel for where you're at on that, because that can be a floor where people go ahead and get off the elevator. And in this case here, Lorna, that'd be the 0.618 retracement level. That's what took place last week, and that is what's taken place today. So there's some folks, sellers that would be, that are getting off at a natural area, not necessarily a reason to sell. The daily time frame, your next level of resistance that this will need to clear is 261. Now, that structure of this box, I don't know if this is a trade or what have you, but this is a bearish structured box. If you see price get below the center of that box, that's 242, where buyers and sellers are lined up, price is going to head to 204, or should. That's support. That's the bottom of the box. So I don't know if that's a problem for you or not. If I look at Stevie's other charts out here, or other chart, I should say, this shows that price has gotten up to a level of resistance. It would have been invisible without taking a look at those 9 counts out here, but it's this green line from the trading day of October the 20th. Notice how this has been a level of support. You want to see price get above that. Hey, my green line is at 232. My oscillator and change line is at 232. Nothing wrong, but clearly this is up at resistance. And you want to see that resistance fail in order for EGY to continue moving higher. Folks, thanks so much for being here this week. Have a great weekend. Stay tuned. Your favorite polar bear, he's up next. Tom O'Brien from 3 to 4, 3 to 5. And we'll be back with you on Magical Monday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
If you haven't